All right.
Let's give the people what the people want.
Hello, peeps. So
y'all?
we want to give an update about what's happened since the big Fed rate Sunday. We shot a video talking about it, and so now it's Tuesday, and there's been some changes. So what?
Yeah, some changes. No, keep going.
Oh, yeah. So some significant changes,
Yeah.
and we want to talk
Spin it
about
lightly.
what's going on. And if you locked in already, Austin and I kind of want to talk about what does that mean for you. And so we're going to take a quick step back, Austin. We kind of wrote everything out here. What happened in January and February coming into the month of March?
Yeah, so most people know that a couple of weeks ago we hit the lowest rates ever in the 244-year history of our country. So that was awesome. Over the last couple of months, rates have been slowly trending back down. And then once the coronavirus stuff started coming out and kind of hitting the news, we started seeing things pressuring rates down to that low spot. We hit that low spot. Rates don't stay at the low spot for very long. And so we were there March 2nd, March 3rd. And then after that, this is the part that you probably missed in the news cycle. The news tells you when things are adjusting, for positive purposes for mortgage rates, but not negative. So what happened after we hit the bottom was rates started going up that week.
Yep.
And then last week, it was one of the bloodiest weeks I've seen in my career. Rates just skyrocketed. They were anticipating a Fed rate cut. There was, so much volatility in the market, and people were moving to mortgage-backed securities, safer place, and it was just driving mortgage rates.
Yeah,
all the way up.
Each day, Austin and I were having like 2 or 3 pricing changes of things worsening.
Friday, we had 4 price changes.
Yeah,
it
all
was
going up.
crazy. So
this is March 2nd, March 3rd. This is the week of the 9th and 10th. And then obviously today's the 17th. So on the 15th, on Sunday, the Fed made a big announcement.
So drum roll, what happened after the Fed adjustment? Yesterday, one of the biggest positive adjustments that I've ever seen. It was wild.
One day.
So we gained back not all of what we lost last week, but we gained back a lot of it. So that was really cool. But we were curious what's going to happen day 2. Is this going to continue? Are we like in free fall? Or what's happening? And now we know.
Yeah, and one thing to note is Austin and I had a lot of loans in the pipeline that we were ready to lock. And so we locked a whole lot of business right there for our borrowers.
Yep.
And so one of the questions we've been having is like, the Fed cut rates. Hey, it dropped here, but what does that mean for me?
Yeah, well, so we'll talk about that right now. So when the Fed adjusts rates, y'all know if you watched our other video, that doesn't mean that they're controlling mortgage rates. It has an effect, had a big effect on it yesterday. But that's an effect on where mortgage pricing is on that day. If you locked in here, whatever's going on in the mortgage market today doesn't affect what the pricing was when you locked. So the Fed dropping their rate for mortgage banks this week doesn't affect anybody that locked in 2 weeks ago. And that's not bad news. That's actually good news for you guys that y'all are in a better position than where the market is right now, even after a huge correction. Also, in addition to that, today, we're back up. So we've almost lost everything that we gained yesterday. I've never seen 3 days like we've seen the last 3 days. Normally, we're talking small little ripples. These are massive swings. They're ugly. They're scary. We got a lot of people trying to time this well. And if you're in the loan process right now, what do you think they should do, John?
Stay the course. We said that Sunday night. That's what we expect would be our message for everyone that is buying right now or already locked in a refi. It's like, stay the course, because we're in unprecedented times right now. Also, I keep saying, like, we have no idea what's going to happen come early summer or even, late summer and early fall. Things could go up, things could stay neutral, things could come back down. We have no idea.
Mm-hmm.
And the thing we want to caution you with is waiting, right?
It's super scary to wait, especially as we get ahead of the coronavirus. Right now, we're in the middle of all the bad news. Once this thing is under control and we're coming out of it, the economy is going to come roaring back, and this bottom is going to be gone. And so I've got a lot of people going, hey, I don't want to send in my stuff to processing or get that condition into underwriting because I might want to wait. Don't do that. Put yourself in the position to be able to close with what you have. And once everything's done, if the market is better, significantly than where you're locked, let's have that conversation about whether or not you should do anything. But if it's worse and your lock expires because you didn't get your stuff in, you're going to go to worst case scenarios. So I get it. Everyone's trying to be responsible. There's an element of greed inherently with that.
Mm-hmm.
Be careful with your greed. Be careful with trying to time this. All of the advisors that we listen to that are mortgage professionals that focus on the mortgage market are strongly advising, if you are locked and able to close in the next 30 days, do it. And if you're not closing in the next 30 days, very cautiously float your rate. Things can get worse just as fast, or if not faster, then they can get better.
Exactly. So we're in unprecedented time. So let us know if you have any questions. We just want to shoot a quick video, as a lot of people have been like, what happened Monday and what's happening today? So that's what's happening. We had a big drop, then we had a big rise. So we'll keep updating you and seeing how things progress over the next couple of weeks. So
it's a wild world out there, y'all.
all right.
Stay safe.
See you guys.
Adios.